Now, the second thing I wanted to mention today and put on your radar screen is what's happening in the regulatory environment. We are living broadly in a regulatory environment that the Wall Street Journal has called the age of hyper-regulation. And its impact on the private insurance market and the consumers we serve is starting to be felt in very dramatic ways. And it's happening both at the state and the federal level. Over the course of the last several years, a number of state insurance regulators have engaged in regulatory overreach that is unprecedented, and misuse of the regulator's office to advance political agenda that have little nexus to the core purpose of insurance regulation or the statutory authority that sets up state insurance departments to regulate, which is market conduct and solvency protection, while providing for effective consumer marketplace. We've seen it in almost every area of the country. In the post-Sandy environment in the Northeast and post-Irene, you had state regulators and governors with a stroke of the pen change the terms and conditions of insurance contracts that had been approved by state insurance departments to be sold in those states. Another example, at the beginning of this year, California called for insurers to divest in any company that generates revenue from either the mining or use of thermal coal. On the multi-state front, state regulators have been requiring insurers to answer a very extensive and intrusive annual climate change data call. And earlier this year, in May, 6 states launched a new annual multi-state insurance diversity survey with questions about the diversity of companies' suppliers and boards, including sensitive information regarding race, ethnicity, gender identification, and sexual orientation. Now, we have asked those 6 states to help us understand their statutory authority to ask such intrusive questions. And we're still waiting for answers. So it is this combination of regulation, in addition to what we believe are state insurance departments that are clearly going beyond their statutory authority in the areas that they're now regulating, that is very, very troubling. In a recently commissioned PCI survey, we asked our member companies to quantify the cost and impact of regulatory compliance, and the survey showed a substantial jump, a 19% increase to be exact, in insurers' corporate regulatory compliance expenses in just a 2-year period of time, from 2013 to 2015. Now, those costs either have to be borne in one of 2 ways, just absorbed by the company or passed on to consumers. We found small carriers shouldered a bigger burden when it came to corporate and regulatory compliance related expenses. And our members don't see any relief on the horizon. Indeed, 89% of the members we surveyed said that they anticipate compliance-related expenses will continue to grow dramatically over the next 2 years. So these examples of regulatory overreach ultimately threaten the stability of the state-based insurance regulatory system that's been in place, as I mentioned, for 150 years now, and that's served consumers pretty well. You cannot find another country around the world that has as competitive a market for insurance products as the United States. Europe is characterized by a handful of national champions in the insurance space, where, as I mentioned, there are well over 1,000 U.S. companies that compete for home, auto, and business policyholders' business every single day. And what we're very concerned about is that we will begin to see the same kind of consolidation in the insurance space that we have seen in the banking space post-Dodd-Frank. You know, one of the real perversions of Dodd-Frank is that it has increased the 5 top banks in the U.S. have increased their market share post-Dodd-Frank compared to where it was prior. And that market share has come from regional and community banks that have been devastated by the increased compliance cost. They simply cannot absorb those compliance costs. And we've seen clearly what happens there, and we're very concerned that the same thing not happen in the insurance space.